pick up from where we left off, Charles Clutch Trucking. Okay, and we were talking about the worksheet, and in the accounting cycle, oh, where'd it go? In the accounting cycle, we're talking about how the worksheet, okay, we'd analyze the transaction, journalize, post to the ledger, take a trial balance. Now, when we're ready to prepare the financial statements, the worksheet is right here, comes in right here. Or we'll start with our unadjusted trial balance. And what we're going to do is prepare a worksheet just to get a preview to see where things are at. So we've got, for Charles Clutch, we've got 4 journal entries that we were going to do. Now, these journal entries are not yet written in the general journal. These are just in your working papers. Okay, they're not in the general journal. When you write in the general journal, it's an ink. It's an ink, right? So we just want to get a preview, see what the general journal looks like. So here's our 4 journal entries. I kind of went 1, 2, 3, 4. They're not written in the general journal yet. These are just in our notes, just in our notes. Okay. And what we want to do is, now that we've got our 4 adjustments, what we want to do is we want to enter them into our worksheet. Okay. Let's just have a quick look at these adjustments. The first one is, let me just, where'd this go? We should just talk about these briefly. The first one is for the truck. We depreciated the truck for 5 years. Okay, so depreciation expense, accumulated depreciation. That's always the same journal entry. Okay, now the trick here is, we've got 80,000 minus $8,000 divided by 5. The trick here is that we have to prorate this, right? We have to further multiply this by 1 of 12 months. Why? Because if we look at, let's see if I can get these both up. Go here like this. Put this in the middle, right here. If we look at Charles Clutch, if we look at his worksheet here, what does this say? It says for the month ended, for the month ended. So we're looking at a 1 month period in our income statement. We're looking at a 1 month period in our income statement. Okay, so we have to prorate this. So the amount is $1,200. Our second entry is 1/3 of the storage income is not yet earned. So if we look down our trial balance, we can see storage revenue. We've got an account called storage revenue, and you can see it's got a $3,000 credit balance. 1/3 is not yet earned. 2/3 is earned. So of the 3,000, 2,000 is earned, 1,000 is not earned, which means that we owe our customer a service for $1,000. So what we have to do is reduce storage income. So we'll debit storage revenue is the official name of the account, $1,000, and we'll credit unearned revenue. And we can see that account right here, unearned revenue. Our third entry is where.
Can I ask a question about that? Because I actually approached it the other way, and I went from unearned revenue, divided that by 3.
Okay, but what does our question say? It says 1/3 of the storage.
Oh yeah, my bad.
The storage income. Yeah. So like I see your logic, but read it carefully. It's saying a storage income. So I think it's referring to the storage revenue account, right?
And the math works better for sure.
Yeah, the math works better too. Yeah, they're always straight numbers. If it was the other way, they would say something like 1/3 of the unearned revenue is still not earned, right? If they were referring to the unearned revenue account.
Got it. Thank you.
The next one here, they're expecting an invoice to arrive in the mail. $200 used or consumed. So this is an accrued expense. So they used or consumed the office supplies and they haven't yet been able to do the journal entry, or the journal entry is not done because there hasn't been a source document to analyze. So we need to add it in or include it. And again, you have to be told this, or your manager has to tell you, or you need to have sufficient knowledge of the business to know that it was ordered. You approved this order, but and the invoice hasn't come, right? So you have to be told this. You know, you can't expect to randomly know this. You have to have knowledge of the business. So we debit office supplies expense, and you'll notice I use office supplies expense because that's the name of the account over here in our trial balance, office supplies expense. And we haven't paid it yet, so it goes into accounts payable. And then the final one, we've got Charles. He hauled a load to Chilliwack, which is a town outside of the Lower Mainland here, outside of Vancouver. And so Charles, obviously, by looking at this, he's a trucker. He's a trucker, drives a big truck, and he carried some goods to another location for a customer and charged him $750. Now, he did it on the last day of December. The staff won't be back until January, right? What we often do in Canada is on December 31st, we celebrate the last day of the calendar year, New Year's. And so people often, they go home a little bit early. Sometimes if you work in an office, they might open a bottle of champagne, right? Everybody will toast a new year coming up. And then your boss will usually let you go a little bit early, and then you can get ready to go out for New Year's party. So the invoice is not going to be prepared until the staff comes back, until the clerks are back on the 2nd or the 3rd of January. But the problem is it was earned in December, right? Revenue recognition. Okay, well, definition of revenue, have we done it? And revenue recognition, we need to match to the timeline, right? When did we earn it? Now the source document. The source document, the bill, will be prepared in January. So we have to accrue it. We have to add it in. Okay, so there's our 4 journal entries. The last 2 were accruals, and the first one was depreciation, and the second one was unearned revenue. So let's go to our worksheet now. That tickled my throat. Excuse me. I'm going to sneeze. I sneeze, but it is. I feel it's coming. So what we want to do now is these journal entries are not in the general journal yet. What we want to do is we want to pencil these journal entries into our worksheet so we can sort of get a sneak preview of, look at this. Here we'll put our adjustments here in columns E, F, and G. Columns H and I will give us our adjusted trial balance. And then here's our income statement and balance sheet columns. So we can get a sneak preview of what the income statement is going to look like and what the balance sheet is going to look like before we draft up a formal balance sheet, a formal income statement. Okay, so let's enter in our adjustments into our worksheet. And our first is a debit to depreciation expense. And let's call this entry number 1. So if I go to our row 19 is for a depreciation expense. So in column D, I'll write a 1 because it's the first journal entry. And then column E, $1,200. Eating something. $1,200. We've got a debit. So in the adjustments debit column, let's put $1,200. And then the second one here is a credit to accumulated depreciation. So accumulated depreciation is in row 12. So column F, let's put a 1, and column G, let's put the other side of the entry, the $1,200 credit. So we've got the adjustments credit column, $1,200. And enter in the other 3 journal entries, same sort of way. Enter them into your spreadsheet now. Row 18 is storage revenue, and we're debiting that. We'll put a little 2 here. I've gone ahead and entered them all in. You can see on the bottoms here, I get a total of $3,150 along the bottom here. My total debits, $3,150. My total credits, $3,150. You guys getting the same number, $3,150? Am I correct? $3,150? Yep. Okay, good, good. So we've entered in, and again, this is not the general journal. Okay, this is just in our files, just in our working paper. This is just a tool that accountants use to see a preview. So we haven't done anything in ink in our general journal yet. So now let's prepare our adjusted trial balance. Okay, so if we look at row 8, that's bank. The other word is cash, but this Charles has chosen to use the word bank. You can see he's got a debit of $1,200 in the unadjusted trial balance. There's no adjustments. So in the adjusted trial balance, it's going to be a debit of $12,500. It's continued to be a debit of $12,500. If we look at accounts receivable, we can see in the unadjusted trial balance, we've got $6,000. In our adjustments, we have a debit of $750. So a debit of $6,000 and a debit of $750 makes an even bigger debit of $6,750 in the adjusted trial balance debit column H. Office equipment and trucks, $4,000 and $80,000. There's no adjustments made to these accounts. So we've got 4 and 80. So continue on, please. Please complete the adjusted trial balance. Please complete the adjusted trial balance. The sum of my debits and credits, I'm getting $115,650. You guys getting that too? $115,650. Yep. Okay, fantastic. We must be doing something right. Your number should be, your totals down here should be $115,650. Okay. If it doesn't, that means you did something wrong. So our next step is going to be we want to get a sneak preview of what's occurring in the income statement. So our next step is going to be to carry these numbers over to, oh, that didn't work, to the income statement and balance sheet columns. Okay, so we've got bank, and we can see in our adjusted trial balance, we've got $12,500. We have to ask ourselves, well, what type of account is this? Bank is an asset. Where are assets located? On the balance sheet or on the income statement? Well, assets are located on the balance sheet. It's a debit balance here. So in our balance sheet debit balance, let's put the balance sheet in, or the bank in. Accounts receivable, row 9. What type of account is accounts receivable? We've got $6,750 in our adjusted trial balance. It's an asset. Where are assets located? On the balance sheet. It's a debit in our adjusted trial balance. So it will also be a debit in our balance sheet. Office equipment and trucks in our adjusted trial balance, $4,000 and $80,000. They are assets, and assets are located in the balance sheet. So please allocate our adjusted trial balance column, allocate these numbers to our income statement and balance sheet columns. Okay. So if we look at our income statement, got two columns. For my income statement debits, I get $9,400. For my income statement credits, I get $11,750. Oh, wait a minute, they don't agree. They don't agree. Unadjusted trial balance, debits equal credits. Adjustments, debit equal credits. Adjusted trial balance, debits equal credits. Now we come to the income statement. The two columns don't agree. Do we want them to agree? Do we want them to agree? Let's think about this. Income statement credits, that's our hauling revenue and our storage revenue. So income statement credits are revenues. Income statement debits are expenses. Do we want these two columns to agree? Do we want our revenues to be equal to our expenses? No. This is our profit. Okay, we absolutely want our revenues to be bigger than our expenses. So, so let me on right here, if I go plus 11,750 minus 9,400, so revenue minus expense equals $2,350. So on row 26, I'll add the profit under column J. And when I add the profit in column J, we can see that the columns J and K now equal $11,750. So that works. That works, and we're happy. Okay, so they're balanced. Our balance sheet columns, look at this. So our balance sheet columns, we've got a similar problem. We've got 106 in one column and 103 in the other column. If I take 106,000 and I take 103,000, I subtract it. The difference between the two is that same 2350. 2350, we know that number. That number is net income. That number is net income. So if we add that 2350 over here on the right, then our columns balance. But does it make sense? Does it make sense? Net income isn't in the balance sheet. Net income isn't in the balance sheet directly. These last two columns are for the balance sheet and the statement of owner's equity. What's the formula for the statement of owner's equity? The statement of owner's equity is opening capital plus investments. So the opening capital plus the investments are here in this $53,000. The balance carried forward from last year, plus any new investments this year, if there were any. They are in this $53,000. Okay. So opening capital plus investments plus net income, net income. So net income is in the statement of owner's equity minus withdrawals, the $3,000 equals our closing owner's equity on the balance sheet. So all the elements are there for the statement of owner's equity. Okay. All the elements are there for the statement of owner's equity. And as I said, this is just a tool. This is just a tool. We haven't written our adjustments in the general journal yet. We just want to see what's happening here. And we look at this and we think 2350, that's a little low. I think I was expecting it to be higher. So you talk to your boss, you show him like, look here, we only got revenue of 2350. Then the boss says, oh, I'm sorry, I forgot a couple things here. You know, a customer, storage revenue, I forgot to mention this one customer, right? He is just paying at the end of the year. Okay, but he's paying us for 1 year storage, and he's going to pay us at the end of the year, which is next month, right? I haven't given you the paperwork for that. So he gives you the documentation. So it doesn't show anywhere yet because he hasn't given us any money, right? And then the boss says, oh, and here he reaches into his shirt pocket and he says, here's a whole bunch more invoices. This is a bunch of fuel. I had to put it on my personal credit card because the business credit card is full. Can you please reimburse me for that? Right? Plus I had a few other expenses here and he gives those as well, right? So then what we can easily do is just go over here and we can, you know, easily add in the fuel expense, you know, entry number 5, you know, however that amount is, right? We can just easily add them in. And then we can just very easily see how the numbers flow through into our balance sheet and our income statement. So once we're happy with our balance sheet and income statement, and we're happy with these adjustments, then it would be at this point that we go back to our accounting cycle. Okay, we had our trial balance right here. We journalize our adjustments. Once we're happy with the worksheet, we'll journalize all of our adjustments right here. We'll post to the ledger, and then we'll get our adjusted trial balance. Now, this adjusted trial balance right here should be the same as our green adjusted trial balance. They should match, right? So the trial balance that we take after we post to our general ledger should agree to this trial balance right here. If it doesn't, that means we posted one of our adjustments wrong in the ledger, or we have a little problem. We have to sort that out. And then we're now ready to prepare our financial statements, our balance sheet, our income statement, and our statement of owner's equity. Any questions about this?